So Three Arrows Capital is one of the most controversial names in crypto. The now bankrupt hedge fund was borrowing billions from crypto lenders and as a result played a central role in this summer's price meltdown. As one of its biggest bets collapsed, Three Arrows defaulted on those loans and faced cascading margin calls. Unable to pay those, Three Arrows eventually filed for bankruptcy this summer. Joining us now is Kyle Davies. He's the co-founder of Three Arrows. Kyle, we appreciate your time today.
Yeah, thanks for having me.
So before we get to FTX, we have to talk about what's going on here with your fund. So Three Arrows liquidators claim that you and your co-founder haven't been cooperating. Lawyers have said earlier this summer that your physical whereabouts were unknown ahead of certain court hearings. Where are you now, and what are you doing to get your investors' money back?
Well, I mean, first of all, I'm in Bali. Second of all, we've been contacted by the liquidator and contactable the entire time. Every call, every email, every video, we've attended with them. So, I mean, frankly, we've been cooperating the whole way. Just as one point to that, the first thing we actually did is in the first 2 weeks, there was a major position which needed to be exercised. It was a warrants position. Reminded the liquidator 3 times. They didn't even exercise it. So in my mind, I think there's a process that needs to be done, but we're here. We're cooperating. We're some of the biggest creditors ourselves.
Kyle, your firm filed for bankruptcy back in July. You haven't publicly mentioned FTX until this week. Why are we only hearing about these allegations now?
We have mentioned it many times, but frankly, no one wanted to hear it. If you recall, one of the biggest critics of us right after our collapse was Sam Bankman-Fried himself of FTX. And we now know, as things are coming out, that he was probably covering up a lot of things on his side. And it's also coming out that he hunted our positions. So I think it's one of those things that in the trueness of time, we'll find out the truth, and we're looking forward to justice.
And Kyle, so explain that to us. You say FTX and Alameda colluded to trade against clients. Your positions were hunted and liquidated, as you put it. Walk us through that, and what evidence do you have?
So everything's coming out now, which is why we're being a little bit more public. But the FTX and Alameda are 2 separate firms. FTX is an exchange. Alameda is a trading firm. They have similar ownership. It's coming out that they, shared information and that they sat in the same room, and that I've got ex-employees or recent employees of FTX, which are bragging about hunting and liquidating our position. So this is not the way in non-crypto companies. This is just not the way it's done, right? There's a clear segregation between an exchange and any kind of proprietary trading firms, which was apparently not the case.
Andrew, it's Becky. I take it you're not in Bali because of the G20. Are you there because Indonesia is one of 7 countries that won't extradite you back to the United States?
No. Well, for one, I haven't lived in the United States for like a decade. I've been in Asia. But for 2, no. It's just a good place to be.
And Kyle, we do have a statement from Sam Bankman-Fried on your allegations. We just want to read that to you. He says, "I'm shocked." He's saying that, 100% disagree. "It's extremely disappointing and irresponsible. I'm sad about what's happened with FTX over the past few weeks. And I'm trying to do what I can to address that." He says, "I don't want to minimize that, but this is completely different." And he says there's no truth to their allegations here. Your response to that, and question on why he would want to take down one of his biggest clients if eventually that led to the demise of really a lot of other big players in the industry and eventually his own failure.
He for sure misjudged the situation, right? I think from the early days, we were their biggest critic. I didn't even trade on their exchange for the first year and a half. But as they got bigger and bigger and we saw some of their backers, we assumed that they'd cleaned up their act. And we were just wrong. We apparently they were still sharing information, still trading against clients, and they completely misjudged the situation. It was indeed after they took us down, there was a giant credit squeeze across the industry. And as lenders recalled all their loans, that's what revealed the hole in his balance sheet and eventually led to his downfall as well.